Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. I wanted to make a comment. It's a post by Scott on Twitter. Scott's got a lot of really good posts. Good job, Scott. I do follow him on Twitter. And he says, my view of where we are in the uranium cycle. Let me get myself out of here. It says, my trusted friends, he's got me under there. Do you agree? Where do you think we are? So he's got a picture here. This is Cameco Corporation. Here's your time frame. What he did is he put in the first rate hike. The first rate hike is in the yellow, and then in June 7th was the peak. The first rate hike is coming up in March of 2022, which is coming up here. And then April of 2025 would be the same time frame, roughly, if we were to repeat the last cycle from 04 to 07, 22 to 25. And if the percent gain was the same, it says the approximate same percent depth and length right here, it is the same. He's saying if we were to repeat this cycle, we would peak out at around 2025. That's what we have. And he's asking, do you agree? Where do you think we are? And I do agree. I do agree. Why do I agree? Because all of the chart patterns, when I look at these chart patterns, they go through the same consolidation periods, and then they go up. What you're basically doing is you're looking at this from a fractal type perspective, kind of. And that fractal can be applied to this situation. So I agree with what you have. And you have a target of like $140 on Cameco. And right now we're at $23. So is that a price projection that I have? No, not necessarily. I kind of leave it open, but I do want you to ponder a couple of things that I'm going to bring up here. And it deals with the market conditions. So I'm bringing up a chart here. I've talked about it two other times. I'm going to get myself out of here. This is the gold to monetary base ratio. And also what I'm going to bring up is interest rates. So we've got interest rates here. I've got both of these things. And let me pop in. I'm just going to give you kind of the background of why I'm going over this and how it pertains, okay? It pertains because the market conditions sets how money flows into assets. The money flows is what determines asset valuations. It's the ratios that determines where money has flown and how those assets get priced against each other. What I am seeing is that I'm seeing an energy crisis. We're seeing instability in the system. The stability of natural gas prices, the stability of coal prices, the stability of oil prices. We're seeing this instability in the system. We're seeing instability in the delivery of electricity. Now, my question to everyone else is, what is the cost of an unstable electricity system to the system? I would say that the costs are quite dramatic. It could result in declining production of manufacturing, its cost in the economy, its cost of the production of certain things in its entirety. Because when you shut down the electrical grid and you have rolling blackouts and whatnot, you're going to reduce the production of certain things. The cost of natural gas went through the roof when we implemented more renewable energy. Well, why is that? Renewables weren't generating power as much as what we had thought. There's no way to really store electricity, at least at this time. And we ran through a bunch of natural gas, and our natural gas usage in comparison to inventory, just the size of inventory, and in relationship to the production is off. So we're using far more natural gas. We're emitting far more carbon, putting more renewable in than what we had done before. And we're just running and running and running our natural gas power plants and coal power plants now. We are basically running to anything that can generate stable electricity. We are running towards it. What is natural gas prices done? Gone vertical. What has coal price has done? Gone vertical. And a substitute is oil. And what is oil going to do? We're going to run into a shortage of oil. It's going to go vertical. We're basically in an energy crisis scenario. My question is, what should the price of uranium be if you have a stable, predictable, baseload generation power source that is emissionless? What is the value of that? Now, we did not have anything like this, not even near this, last commodity bull market. Not even close. The market conditions are completely different. And if I were to pull up, and I'll do this real quick just because I want to make the point. So I'm going to go to trading economics, and I'm going to look at, say, the uranium price, and we're going to look at a bunch of different commodities here. You're going to get me out of the way here. I'm going to hit all. This was the last bull market from about 2000 all the way till 2007 for uranium. It's a very big market, very big move. That was a liquidity-driven event, and we still had a lot of capacity of commodities themselves, the actual commodities and whatnot. We're starting to come on up here for uranium. This is definitely going to be a big move. And then I want to look at what's, and when we're looking at these things, you want to look around. You don't just look at the one commodity. You want to look at everything. So when you look at everything and you start looking at saying like crude oil, look what crude oil's done, right? Let's look at the last bull market and let's look at this bull market. The last bull market here, you could see from about 98, that was the bottom, that was our buy signal and the ratios and everything on the channel. It came up, did a little pause, and then it went kind of quite dramatically up. We came down and we got tight in our, we got pretty tight in our world capacity in 2008. We were like 3 or 4 million barrels within the pumping capacity of the world, and we were still growing everything in it. We had a bunch of things that we grew all over the world in terms of oil production. Now, what's coming in front of us? We have a war that can take potentially some oil off the market. And then we have a shrinking production, I should say, a shrinking overhead of how much oil production we have, and our inventories are dropping rapidly. I'm still in amazement that we're at $115 a barrel. I mean, I would think my opinion, we should be a lot higher. We need to see inventory, come back. If we don't see inventory come back, this $115 a barrel, it's not going to come back. It's going to keep going up. We got to see inventory go up. We have to see something come into inventory. What I'm seeing is production going down. And it's like, God, this is getting close, guys. I don't know what's going to happen if and this has been proposed by people, and is at some point, our demand will exceed the pumping capacity of the world, which has never happened before. It has never happened before. There is going to be rationing based off of, I don't know what, either prices or people nationalizing things, I don't know, of oil. That we could potentially exceed the pumping capacity, and it could happen fourth quarter of 2022, first quarter of 2023. So in a scenario where energy becomes incredibly expensive and volatile, this is oil going up. Let's look at natural gas. Now, natural gas in America is still, it's coming on up. You can see it. Man, this thing looks like it wants to ramp up too. It's coming on up. It's going to go vertical here for natural gas. It's really going to take off. We've broken the downtrend line here, and I've showed that on the channel. We broke out. We did a back test, and now we're heading higher. And if you look at Europe's gas, look what Europe did. Took off, consolidated, took off, consolidated, and now it's going vertical. Do you really think that uranium's going to be contained to the last bull market? I mean, let's just look at natural gas. This is what uranium's competing with. Last bull market, let's see if I can get the last bull market of, let's try UK gas. Let's see if we got the last bull market there. Guys, this is the last bull market in 05 and 08. Notice that the last bull market here is at 90 and we're at 486. This is about like 4 or 5 times the peak of it. The 4 or 5 times the peak of it, of natural gas in Europe. What would those people pay for nuclear? And apparently they're crazy because they're trying to take nuclear down. There's no way. Like, it doesn't make any sense to me. But, I mean, I look at this stuff and I'm in disbelief. I mean, anyone who's like, oh yeah, you know, uranium's going to stop at $200 a pound. No, it's not. No way. I'm not that. The question is, what do the pricing look like? If uranium did exactly what natural gas has done and does a 5x of last one, 5 times 140 is probably, and I know this sounds crazy, and it's going to be a big move, but 140 times 5, that's $700 a pound. I could see that easily doing that. Easy. And that's just replicating what natural gas has done, and natural gas may not even be done doing what it's doing. And then you've got coal. Let's look at coal. So coal, and remember, these are all competitors to uranium. Look at coal. So we've got coal here. Let me get myself out of here, guys. The 2011 timeframe, which was a good peak, 127. Well, that's, you know, 3 times or more. We're probably going 3, 4, 5 times the price of the peak of coal. If they're all going 4 or 5 times the peak, what makes you think uranium's not going to do that? And we're not even done going up. This is an energy crisis. This is like a big deal. This is going to transfer to the United States. So in my opinion, natural gas in the United States is going to go way higher. The cost of energy is going to go way up. And uranium is going to be no different. Uranium is going to do things that are completely different than what most people's paradigm has ever kind of seen this in, I think. And I mean, we shouldn't necessarily be talking about, and this is my opinion, if you want to go to the extreme, we shouldn't necessarily be talking about, is this chart right behind me? We should be talking about, do I live in a cold climate and can I afford the heating costs of these of heating my house? And if the answer is probably not, what I would think as the best investment that you could potentially make would be a house in a warm climate where you're close to something that, you know, your food or whatever. That is the most valuable thing. You're going to see the price of that go through the roof. That'll be probably one of the best investments, because if this goes as high as what I think it's going to go, which is probably going to be far higher than that target, I mean, you might as well just put 140 and put a 0 on it. I mean, it's possible, because if you're in an energy crisis, and on top of this, okay, on top of this, we have barriers to entry. They're literally providing a moat. Governments, they're providing a moat around all of the energy companies, saying that you can't drill here, you can't do this, you can't do that. Investments, we don't want to put investments in these companies, and then they're going to tax the emissions and the carbon and all this other stuff. They're just going to blow up the cost of anyone who has, or they're going to blow. They're basically, it's a barrier to entry for all the companies that are coming in to go into these areas. And then on top of it, it's any company that already has existing production, which will probably stay in production, is a good bet, will become infinitely valuable. And that's exactly what we're seeing with all of the charts that I'm showing you guys, and all of these charting in terms of the chart patterns in coal, the chart patterns in natural gas, the chart patterns in energy service companies, the chart patterns in all of these things. If investment's not going to go in it because of an ESG at this time, it may not be like that in the future, but at this time, they're going to block people from, you know, drilling from wherever. This is like totally mispriced. It's so mispriced that I don't even know what to put figures on it, because what we're seeing is completely different than what we've seen before. Like, I've never seen natural gas prices do this. Has anyone else? Have you seen coal prices go up? What coal prices, and I've got this up in the background here, they're up something like, I mean, this was like the first leg. Then you're going to get like a third leg, and that's not even done yet. And then, you know what? I wonder if I can look at coal, and I mean, this is all just completely ridiculous to me, guys. I mean, coal is up like 75 up to 100%. Newcastle coal futures. Let's look at this. Look at this, guys. What is this? I mean, my lord. This was kind of like the lead in, and this is the breakout here. This is the kind of the double booty bottom, the slingshot pattern, then the move, and I don't know where the heck this is going. This doesn't even look like it's done yet. I'm just going to throw something on here, maybe a trend-based fib extension. If this was like a first leg higher, 1.68 gets us, and I'm not saying it's going to stop there. We could go all the way to 700. We could do like another double on this almost. And this is moving. Like if you look at this chart, I mean, it's finishing strong on the monthly candlesticks. I mean, I can go to a daily candlestick, and it's still moving quite strong to the upside. Let's get that out of the way. You can see this moving on up, especially this past couple, week or so. Let's go to the 5-year. There you go. Look how strong this is. The pullback, and then boom, we're breaking higher above this all-time high, and we're in a breakout run mode. I mean, this to me, this isn't a normal market. And everyone's looking at, oh, it's going to crash back down. I don't know, guys. We are short energy, and you starve a system of energy. This is what it looks like, apparently. So in my opinion, I think your figures are far too conservative. I think that the potential here could be multiples higher than what you're even thinking. Does that mean it's going to happen the way I'm explaining it? No. There's no 100% guarantee in anything. But when I look around, the first thing I do is I look at the conditions. Everything is tied to conditions. Conditions, conditions, conditions. Just say it 1 billion times. Ratios determines where the money is. Conditions determine how this thing's going to blow up. And if we want a world where we're going to increase commodities, and if you look at the copper ore grades, they are declining. That means we need exponential use of more energy to get copper out of the ground. Otherwise, you're not going to get the copper at those low ore grades. Exponential. It ramps up. As your ore grades decline, your energy input costs go up. I've done a couple of clips on that as well. If you guys want to look, you can search for them. But with coal doing what it's doing, with natural gas doing what it's doing, and with oil doing what it's doing, I see uranium as a laggard about to explode higher. So I'm heavily invested in it. What would someone pay for uranium if coal goes up and does another double? Because that doesn't look like it's slowing down. That looks like it's just getting heated up. What's it look like when oil's at $500 a barrel, $700 a barrel? Is it going to get there? I don't know. Everyone's going to say, well, the economy is going to implode. It has to implode. We have an energy crisis. This isn't, it's, I don't know. I mean, I'm talking, I don't know what the price is going to go. I'll just say that, but I can tell you this. That doesn't look normal. That looks like it's taken off, and it looks like we've got massive constraints, like we've made a very grave error in going to renewables. That's what it looks like. And if renewables don't work, this is going to take some time to work itself out, in my opinion. I'll stop it there, guys. I don't want to say anything too crazy. Probably already said enough crazy stuff in this clip. Give me a thumbs up if you guys like the content. Subscribe to the channel if you haven't done so and you like these types of clips. Watch my daily technical analysis updates for potential investment opportunities. That's something that I like doing. I'm very heavily invested in oil and energy services and all these things. I do think that these assets are completely mispriced. And I hope that we don't walk into a major energy crisis that's going to hurt people. I really don't. And I don't know. I just feel like something's wrong. When I look at charts like this coal one, something's wrong in our system, guys. And yeah, we're all trying to profit from it. I get it. But maybe the bigger picture is eluding us. Maybe we literally, if you're in a very cold state, that you got to start going to somewhere that's warm and start thinking about early retirement or whatever, because this looks pretty nasty. Thumb up, subscribe to the channel. Thanks for listening. This is Finding Value.